Why reversal of input tax credit for the tax period from 1st July 2017 to 1st October 2022, when supplier has not paid to government? Section 41(2) of GST came into effect from 1st October 2022. GST Section 41(2), the credit of input tax availed by a registered person under subsection 1, in respect of such supplies of goods or services, or both, the tax payable whereon has not been paid by the supplier, shall be reversed along with applicable interest, by the said person in such manner as may be prescribed. Added White Finance Act No. 6/2022 DT 30th March 2022. By Notification 18/2022 effective from 1st October 2022. And Rule 37 came into effect from 26 December 2022. CGST SGST Rule 37A. Reversal of input tax credit in the case of non-payment of tax by the supplier and re-availment thereof. This rule was inserted by a Notification No. 26/2022 CT-DT 26 December 2022 with effect from 2022. 26 December. Hence the recipient is not obligated to reverse the input tax credit claimed based on tax invoice supplied by the supplier till 1st October 2022. And the input tax credit is a concession given to the recipient by the Act and can claim on self-assessment based on tax invoice. No obligation can be kept on recipient to check that the tax paid to supplier has been remitted to government of not, since the supplier is an authorized agent to government to collect tax from the recipient. 1. Primary conditions to claim input tax credit under GST. Section 16. 1. Every registered person shall, subject to such conditions and restrictions as may be prescribed and in the manner specified in Section 49, be entitled to take credit of input tax charged on any supply of goods or services or both to him which are used or intended to be used in the course or furtherance of his business, and the said amount shall be credited to the electronic credit ledger of such person. Section 41 Claim of input tax credit and provisional acceptance thereof. 1. Every registered person shall, subject to such conditions and restrictions as may be prescribed, be entitled to take the credit of eligible input tax, as self-assessed, in his return, and such amount shall be credited on a provisional basis to his electronic credit ledger. Therefore, it is pertinent to note that when the GST Act mandates the buyer-recipient to pay related tax to the supplier on his inwards supply of goods or services, and such amount of tax paid to the supplier is a legitimate credit to the buyer-recipient. Accordingly, the recipients have claimed the input tax credit based on payments made to supplier along with tax. Hence, no tax is payable by recipient as if he is the supplier, other than the liability under RCM. Tax invoice is primary evidence to get input tax credit. As per Section 16(2)(a), the recipient is in possession of a tax invoice or debit note issued by a supplier registered under this Act, or such other tax-paying documents as may be prescribed. Hence, the primary condition to take input tax credit of tax collected by the supplier is only tax invoice, nothing else. So the tax invoice issued by the registered supplier cannot be invalid due to the wrong committed by the supplier. Many courts affirmed that tax invoice is primary document to claim input tax credit under GST Act. The Hobi Ali Allahabad High Court in the case of Jai Ma Jwalamukhi Iron Scrap Supplier v. State of U.P. 2021, 127 Taxman.com 474/86 GST 1152021, 53, G.is.tl. 257 categorically decided that there shall be no levy on the basis of GSTR 3B versus GSTR 2A. The Hobi Ali High Court opinioned that the invoice is primary evidence of the transaction. Unless the Revenue Authority disputes its genuineness, it cannot be lightly overlooked. Perusal of the said order would reveal that other than the defect of non-production of books of account, assessing authority has also taken into consideration the fact that there were discrepancies arising on the basis of the details mentioned in the autopopulated GSTR 3B and GSTR 2A, filed by the petitioner. Even otherwise, in face of the admission, as to the genuineness and existence of the tax invoice and the e-way bills, mere existence of some discrepancies may not have ever led the Revenue Authority to the conclusion that tax had been evaded or the transaction had not been disclosed. And the Honorable High Court of Gujarat in the case of New Nalband Traders v. State of Gujarat, 2022, 136 taxman.com to 842022, 66, GSTL 334 adjudged that before we close this judgment, we must observe something as regards Section 43 of the Act, 2018. Section 43A was inserted into the Act via the CGST Amendment Act, 2018. Section 43A, 6, provides that the supplier and the recipient of a supply shall be jointly and severally liable to pay tax, or to pay the input tax credit availed, as the case may be, in relation to the outward supplies. However, Section 43A has not been notified yet. Therefore, the same does not apply. In the absence of Section 43A being notified, this power has not been contemplated by the Act. However, the ITC reversal mechanism, as laid down in Section 41 read with rules, is kept in abeyance. The facility to furnish GSTR 2 and GSTR 3 forms is also not available. Accordingly, there is no system-based matching of the ITC being carried out presently. Until the time such provisions are given effect, the recipients shall be eligible to claim ITC provisionally on the basis of the invoice issued by customer. And in another case, the Hobbieli Calcutta High Court in the case of Sanchitha Kundu v. Ast. Commissioner of State Tax, 2022, 142 taxman.com 5762022, 63, GSTL 413 observed and adjudged that entitlement of benefit of input tax credit in question by considering the documents which the petitioners intend to rely in support of their claim of genuineness of the transactions in question, and the respondent concerned shall also consider as to whether payments on purchase in question along with GST were actually paid or not to the suppliers, RTP, and also to consider as to whether the transactions, and if it is found upon verification and considering the relevant documents that all the purchases and transactions in question are genuine and supported by valid documents. The Honorable Supreme Court of India, in the case of State of Maharashtra v. Suresh Trading Co. 1198 taxman.com 1747 has also specifically held that the input tax credit should be allowed based on tax invoice. The respondents who were registered dealers had purchased goods from a registered dealer who had issued invoices containing a certificate that the registration of the selling dealer was in force on the date of the sale. The respondents, upon reselling the goods, claimed to deduct from their turnover of sales the resale of the goods which had been purchased by them. The assessing officer disallowed the claim on the ground that the registration of the dealer from whom the respondents had purchased goods had been cancelled with retrospective effect. Court held that the purchasing dealer was entitled in law to rely upon the certificate of registration of the selling dealer, and the retrospective cancellation of the registration certificate of the selling dealer would have no effect upon any person who had acted upon the strength of a registration certificate. No recovery from recipient when supplier has not paid tax under GST. The High Court of Allahabad in the case of Rama Brickfield v. Adil. Commissioner, 2023, 156 taxman.com to 52. It has been argued on behalf of petitioner that Rohit Coal Traders has filed his return for AY 2018-19 I GSTR 1 and GSTR 3B. It is a matter of common knowledge that after filing of GSTR-1 an auto pop-up window would be opened for filing of Form GSTR-3B for payment of tax, and Form GSTR-2A can be viewed by the purchaser of goods in question. Once the said form was generated and the said fact has not been disputed by the authorities below while passing of the impugned order, which goes without saying that at the time of transaction, purchaser and supplier both were registered. However, at the subsequent time, if the seller, i.e. Rohit Coal Trader, was found non-existent, the proceeding can be initiated, but the authorities has failed to consider the fact that GSTR returns as prescribed under the Act was filed by the seller to which not a single word has been whispered while passing the impugned order. On the contrary, an observation has been made that the petitioner has failed to bring on record any cogent material to show that Rohit Coal Traders has deposited the tax, and therefore proceedings were held to be justified. Under the GST regime, all details are available in the portal of GST Department. The authorities could have very well verified as to whether after filing of GSTR-1 and GSTR-3B how much tax has been deposited by the selling dealer, i.e. Rohit Coal Traders, but the authorities have failed to do so. Thus, looking to the said facts, the impugned orders cannot be sustained in the eyes of law. If you get beneficial information from this video, please like, share and subscribe, and also press bell icon for the latest uploads.